so-called Big Beautiful Bill. It includes big changes to state and local taxes, otherwise known as SALT. And if you itemize your deductions when filing your income taxes, this could benefit you, especially on home and car loans. NewsNation's Alicia Nieves is looking into how these new laws will impact your bottom line. Alicia, good morning. So many people have had questions and have been told a lot of things will be scary, but that's not necessarily the case. You're saying, how should borrowers be prepared and what should they know?
Yeah, good morning, Nick. For all those who have questions, that is why we're doing this story. We've been doing this kind of coverage over the last couple of days. Listen, we're at a time right now where interest rates for most Americans, especially when it comes to buying a home or a car, are double or more than double what they were just 5 years ago during the pandemic. So these new provisions in the One Big Beautiful Bill have the potential to allow more Americans to bring more of their hard-earned money home. We're talking about a portion of about 80 million American homeowners, a portion of the 100 million Americans with outstanding car loans. Both of these groups are going to have their tax liability reduced and possibly, again, allow them to keep more of their hard-earned money. Now, for homeowners with the SALT deduction, that allows taxpayers to deduct the specific state and local taxes from their federal income. That is quadrupled from $10,000 deduction to $40,000 you can potentially deduct. Now, as you noted a moment ago, you do have to be someone who itemizes your taxes, not someone who takes a standard deduction, which has also been up to about $15,750. Now, the deduction begins to phase out for people making over $500,000, and it goes back to $10,000 for anyone making over $600,000. When it comes to the auto loan interest deduction, those who buy a car from 2025 to 2028 will qualify. They can deduct up to $10,000 in loan interest a year. They do not have to itemize their taxes, though. They can take the standard deduction, which typically is going to help lower income earners. They are limited, though, to what is called a qualified passenger vehicle. This is a new vehicle bought for personal use, and the final assembly has to have happened in America. Now, taxpayers with an income over $100,000, they're going to begin to phase out of that deduction. Anyone making more than about $149,000, they're not going to be able to take that deduction at all. Bottom line, as you noted here, experts say the SALT deduction increases. The SALT deduction increase, can reduce your tax liability. Potentially, we're talking $14,800, potentially give you a refund of that amount, or at least a portion of it. The auto loan interest deduction, that's going to likely reduce your tax liability by about $500 or less, so it's not much. But over the last couple of days, we have been covering different provisions of this, One Big Beautiful Bill that could net you, some potential returns. So if you stack those up on top of each other, if you're a homeowner and you bought a new car this year, yesterday we were talking about the child tax credits, and then before that, the no tax on tips and overtimes. All of those deductions potentially for some Americans really starts to add up, Nick.
It definitely does add up, and every American is looking to save as much as they possibly can. Alicia, thank you so much.
Yeah.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.